Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Hey, what's up, everybody? We are here, FOMC day. Just going to fix a quick thing here on the screen. All right, there we are. Looking at the charts. Looking at the charts. FOMC is like right now. Data's coming out in a minute. Are they going to hike? Are they going to cut? Let's go low time frame and see what's going on. Nice. Let me see. This is the 5-minute chart. Doesn't appear. Oh, this is a 1-minute chart. So far, not a lot. Let me go over to the data page and see if we have any news right there. Let's give us a second here. You know, they start talking. The information is not always available right away. It's supposed to be right now, if I'm not mistaken. Let's see here. Wednesday. That's supposed to be right now. Federal funds rate. Okay, I think the data might be coming. Oh, they're holding. Okay. Rates holding, and it's been about a minute. Not a lot yet in the charts, but it looks like, at least for the NASDAQ on the 1 minute, the price is coming up a little bit. You know, it did kind of crawl up going back for the last, say 30 minutes or so, but now it's starting to push up a little bit more. Fix my time zone here. So far it's been a pretty mild reaction in the NASDAQ. It's pushing up though. It's a slightly bullish event. Let's look over in the forex markets. Now that's a reaction. Holy moly, look at that. The euro is cranking up, and you know, it did have kind of a surprise crank up earlier, actually, back about 10 a.m. EST. It pushed up real hard, rejected, and now it's pushed up and rejected again so far. It spiked up to about 115 and pushed right back down. This is an interesting thing going on. Let me fix this really quick over here. Apologies for the momentary here. I just got to add something. Something didn't go right here. Okay. Sorry about that, folks. There, now people, when they come to see what's going on, they can see it. Already the reaction is coming back down. Interesting. Already it's coming back down. So the presser is going to be going on here in a few minutes. Press conference. So we'll see what's going on with that. And looks like we're going to change a couple things in the screen here. All right. Yeah, okay, you shouldn't be able to see me now. I'm going to fix the screen here. I was having a malfunction with my whole system, but we're back on here right now. I'm going to stop the camera, widen out the screen, and there we go. So yeah, so far pretty lukewarm reaction. If you zoom out, we're on the 1 minute chart here. Big spike up, right back down. What I'm guessing here is that price is probably going to just continue where it goes, but we do have the press conference that can happen. Now, markets were kind of lukewarm as they were, at least for the forex markets. And to look at the equities market here, it's on the 30-minute chart. It seems like things are just going in the direction they were going to go, right? It seems like price was going to maybe try to come down a little bit, or maybe they pushed it down to panic people out, but it's just bounced right back up where it bounced earlier today, a few hours ago, and it looks like it's just going to grind in the same direction. So, you know, they did hold the rates. So what that usually means is that, you know, they don't know. There's really no difference between last month and this month on the interest rate. So all the speculation is kind of over from that standpoint. The money is a lot of it back into the market. But what happens on days like this is that Jerome Powell, in his talks, in his conferences, he will talk about things in his press conference, right? So for the moment, I was kind of hoping to maybe find some trades, in the lower time frame as things calmed down. Let me go ahead and crack something open on another screen. Let's see if we can find something. That move up is immediately crushed right back down for the euro versus the dollar, like immediately. So not a lot going on in the market. Let me zoom in so y'all can see it. So we had the initial spike up, rates being held steady. Everybody got bullish on it, and then it sold right off, right back almost down to the level of where it was prior to the move, which is why I don't do a lot of trading on FOMC day. So it's just FOMC day. I wait for the news to be digested and to let the uncertain money flow back into the market. And then I will then I'll talk about like some trades, right? So we're just going to see, let some things calm down and go from there. Let's see. So yeah, it actually looks like right now, at least from the price action, it wants to head and continue downward. So that's actually kind of interesting, sort of. Yeah, okay. Let's take a look at the algos here. I'm going to put on the messy screen with all the weird data on it. And, it just looks like it wants to head sideways. Everything is kind of mixed and compressed. If I add a little bit higher time frame data on here, I might be able to glean some more information. Let's see if I can do that. Okay, so I'll look at the weekly. So, yeah, even the weekly is kind of at a point where it wants to turn around. What I think is going to happen with the euro, okay? The EUR versus the USD, I think it's going to continue to bounce in the same area that it was bouncing in. Now you can see I made this prediction on this was Monday night on a kind of a limited group. Got to see this prediction, and that one hit just perfectly, almost as perfectly as you're going to get. In this case, I think that we may see, and it's real kind of not exact here, but we may see price kind of grind sideways and up, and then make its way up here, over the next day or two. Depends on what's going on. Also depends on the press conference. Once Powell starts talking, then it might be, we see, forward guidance that tells us what they think is going to happen. Hey, I might cut rates, or I might have to hike them. If he gives us any kind of clue, he wouldn't say those words exactly. He wouldn't say, hey, I might have to cut, I might have to hike. But he would give us ideas like, well, the data's coming in and it's showing us disinflation, but not enough for us to make a decision. And, he might waffle back and forth, but usually you can gather some clues as to what's going to happen. And after the cool CPI print that we had last week, there certainly is enough for us to say, hey, there might be a cut, or it might be, a cut, because we had the CPI come in cool. The CPI came in a little cooler than expected. And that was on all the metrics, on the month over month, the year over year. So, we can expect it, and I think the market expects it, but the market right now, I think, is also heavily uncertain due to the business over in the Middle East. Now, the NASDAQ is continuing to climb up. So going back to last week when all of the madness started in the Middle East, well, besides that whole thousands of years issue, it has been climbing, some pullbacks, but it's been wedging up. I drew this just to kind of demonstrate some old school type of trading. These rising wedges, they tend to break downward when they break. Now, it doesn't mean it's going to break downward. It doesn't mean it won't. But what I will do is talk about what the stock market might do in the next, coming days or weeks. And it's all going to be dependent on a lot of things, news, and if the bombs continue to drop, or really big bombs drop, or bombs drop where we were not expecting them, or any of those types of things. But the all-time high for the NASDAQ was sitting at, and we're going to do Bitcoin next, by the way, so stand by for Bitcoin. All-time high in NASDAQ, let me make this visible, was at 22,419. Okay, so we're now at 22,022, very close to the all-time high. So ever since the taper tantrum, and really it actually started with the DeepSeek news that really started to kind of scare markets, but the taper, I mean the tariffs, caused markets to basically fall. I mean, to say it very simply, it was much more complex than all that, but that's basically what happened. And then the tariffs were then more or less reversed or softened, or a combination of that. Price came back almost all the way to its high. Now, anytime I see a move up and then the following pattern, my kind of, newbie trading back when I was a new trader, this really did mean that chances are price was going to drop out of here like this, something like this, because you have a hard move up and then price starts to consolidate in this area, which means it's losing momentum, and then you get a move down. Very, very typical. But when you see this, that's an additional signal for bearishness. That's a rising wedge, and that's an even bigger chance that price is going to drop out of that. No, we are talking about the NASDAQ, the stock market, and the stock market gets held up, and everybody and their mother's 401ks are going in there, and so they always have a bit of money going into the market holding it up. It doesn't mean it's going to fall, but if it did, a really good place or a place that makes sense for it to fall would be like right now or in the next few days, the next week or two, right there, bouncing or trying to reclaim that high and not able to do it. You might get a kind of a short squeeze where the price goes up and a lot of people start putting their money in because, it's going to go up forever. And, we got new highs. And then like they let that go for a week or two or three or four or five or whatever. And then they crash it down after that. Now, the summertime tends to be slow in stocks. That's just how it is. There tends to be a lot less money going in. And with all the stuff going on in the Middle East, I would not be surprised to see that happen. And where would it go down to? Well, as I erased earlier, we had a gap that occurred. And that gap occurred in it was like early May. And so if we extend that out, and that gap was basically from like, 20,280 to 20,380-ish, kind of the sort of 100-point gap, if you will, prices do tend to want to come back down or back up to fill those. That's a market open gap. As far as that, yeah, that's a market open gap. So on Monday, the 12th, market's open and, went up really hard. And that was in May. And so with that, price may want to go back down and fill in that area. It's quite possible. It's just what may happen, right? So let me go ahead and move into Bitcoin. So right now we're looking at the daily chart. I don't expect right now a lot from Bitcoin. I expect it to, and this is real simple report, I expect it to rotate between maybe 102,000 or 100,000 all the way up to maybe the 110 area. It might even kind of have lower highs and fall out. If we do get a breakout and price just goes ballistic as it can do with Bitcoin, then, we have some higher targets of maybe 125,000. Look, Bitcoin really can't do anything. If the FOMO catches on, then, what may happen at that point is, shoot, man, the sky's the limit. Hey, institutionals are buying, everybody's buying for whatever reason. If Bitcoin really, really starts to take off, the sky truly is the limit. But outside of that, and again, we've heard lots of reasons for the sky to be the limit, and the sky has not been the limit. Okay, we've had lots of reasons for that. So that said, I'm not hanging my bets on, hey, it's going to go to infinity next week. I'm just not doing it, or this month, or this year. But I always hold some just in case it does. So to look at Bitcoin right now, from what I'm seeing, it does appear that what we might see are a couple things. One might be this kind of lower high, lower low, or lower high, flat low situation, and then a fall down to grab liquidity, low 90s, high 80s, something like that. And then maybe kind of recover over the rest of the summer and then head back up in the fall, right? And that's outside of, wars and things getting really bad. It's just like if the world stays relatively sane. The other thing Bitcoin could do is to rotate back and forth between that same range, that kind of 100,000, maybe 102,000, and then around 110. And then once it rotates out of that, then of course, it's going to rotate down and break down to those same areas, maybe deeper, or might go up to the targets I mentioned, 125-ish, 145-ish, right? And also, before we get too far, I do have a free algo, right? And I can put you on a list that'll tell you when I'm doing my workshops. I got a free workshop coming up, and I haven't chosen a date yet, mostly because I just have a lot going on. I was going to try to do it before the end of June, but it's getting a little stale. Might have to do it in July. I'm going to let you guys watch me trade for a couple days. Also, trading right now, trying to do that with the wars and stuff, it's a little crazy to try to have you watch me trade on a day like that. But I will, I'm going to go for a couple of days, let you just spend the day with me trading, talk about how I do it, my process, everything else. And it's going to be free. The first workshop is free. Go in the description of the video, copy the link, and it's for a free algo, but you'll also get on that list. And I can tell you, hey, when that's going to be and send you guys an invite for that. And the next ones will be paid. So get the free one while you can. Link in the description. So that's Bitcoin. I've lined that out gold itself, you know what? It's doing what you would kind of expect in the current world, but not as much as you would expect, right? So this is a daily chart, and despite all of the craziness, the last couple days it's been down from the highs and actually kind of flat. It hasn't claimed that $3,500 high that was in April. We haven't seen that yet. It's tried to reclaim that now twice. You know, yeah, really, it's tried twice, and the last time it tried was like on Sunday. So it really, or Monday, really. So it has tried to reclaim that high and not able to do it. And that's interesting considering we are, you know, officially on the brink of World War III, or maybe it's even already started, but the nukes haven't gone off yet. So that said, I'm surprised gold is not much higher, but it did have a heck of a run. And I think the world knew what was going to happen after October the 7th. Yeah, because that's when that's when gold went parabolic. Gold went parabolic after October 7th, guys. I mean, October 7th was like, okay, they're gonna push for war. That's what's gonna happen. And it went. This is parabolic. When you see price do this on any time frame, let me find the shape for this. Hold on. When you see price do this on any time frame, that means it's a very big move and it's probably going to continue up. Now, because this is a daily time frame, it might not do this for a while. You might see a pullback and then, some consolidation for days, weeks, or months. Definitely weeks already have happened. But this might take a while before it continues, but it could very well continue and like crazily continue, right? And that's gold for you. You can see my algo call on the longs and the shorts on that. Those little tabs, that's the algo that I wrote. And that's what we do at Algo Factory. We teach people how to write their own algos. And you don't have to know how to code. I paid a guy to code these in, and you don't even have to code them. You don't have to code anything. You can just use the data on the screen. I just took the data on the screen and paid a guy to code it into these, right? So that's the only reason I have it on my chart, is because I just paid a guy to code it. We actually did a trade, to be honest with you. So silver has been in kind of the bigger look right now. You look at silver and it's doing a lot better. This is a pretty bullish pattern for silver. All right. So whenever you see kind of like a consolidation, like a high time frame consolidation where it goes sideways for like a long time, and then you see this shape right here. And I'm going to draw it because that's kind of a messy chart, but this is going back to like, a year ago. But price has been slowly making higher highs and higher lows. And it's taken a while to do it. But that's an uptrend. And when you see that after a long consolidation, then there's a good chance that's just going to continue and even get faster. So silver might have a lot of upside to it right now. We'll see. There are some things going on in the background institutionally with silver. You have some parties who feel that they need to hold it at a certain price, and we explain all that kind of stuff and what that price is over at algofactory.tech. So come to algofactory.tech to get a lot of the inside baseball on what's going on behind the scenes and why things do what they do and what they might be doing in the future. And we're pretty accurate at that kind of stuff. And if you just go to the link in the description for your free algo and you give us your email and a real or fake name, we don't care. We'll send you all that kind of stuff. As far as how to find us, we'll give you a free algo. You'll get an invite to the webinar, and then you can come join us if you wish. Now, the euro, we just talked about that, and it seems to be doing what I thought it would do. And I think I drew this morning, but I think you saw me draw this on a lower time frame, but I think it's just going to rotate in here just for now. It's bullish, and it's had a moment to pull back from its very bullish activity, but I think that we are going to continue to see it just kind of grind upwards. So buying the pullbacks, I think, is the way right now. We'll see. I have algos that tell me when to do it. Nice long call on this algo right here. Absolute winner. That was a big move. That was, let me see, 44, 100, 200, 300, 400, about 500 pips on the euro. And that was within, let me see, about a week and a half. Yeah. 2 weeks, count weekends. So 500 pips in that much time. That's pretty good, right? So I would have entered on the following candle, so maybe not that many pips. So 440 to 628. Okay, 200 pips, but still, it's pretty damn good. And you don't get all 200, 180 pips, but it's a no-brainer. It tells you to go. It's not always correct, but on these high time frames, it is really pretty correct. Here's another one that I did. Again, it just automatically tells me to do these things. Now, this one here was, remember, it's forex. We talk about pips. We don't care about percent gain. And we do crypto, we do stocks, we do all that stuff. But got in here 9063 up to 1576. So you're talking about 600 pips ish, and it took a week and a half. 600 pips in 1, 2, 3, 4, 5. So 2 weeks. 600 pips in not quite 2 weeks. That's killer. And it tells you to get out. So I built that. And when people in the Algo Factory say, hey, can I see what your algo is saying? I say, sure. And I show them the chart. Like, for example, these shorts here called it out. And this is on forex. I mean, it works on Bitcoin, works on the NASDAQ. So, and this is on the daily chart. So, higher time frame, but it works on all time frames. It works better on the higher time frames. But here you go. Nice short. Price went down real nicely, right? Kept heading down for a couple days. Got a nice short right here. Price just headed down for a couple of days. Not bad. Got the long right here. Called that went up for like a week. These are pretty good wins. Now, realistically, let me see. Now, these are happening like, say, like once a month-ish on the daily. I can go down the 3-hour chart and show you how often they happen. Oh, no, it doesn't happen on the 3-hour. But on the half-hour chart, it happens all the time. And they're, good wins. Nice wins right there. Again, that's not perfect, but it calls a lot of winners. This one called a hell of a win. Shoot, man. If you guys want to see a chart in the comments, just ask. Ask what chart you want to see. Take a look at Solana. It's been quiet. Solana has been not doing a whole lot just because probably waiting for Bitcoin. But let's take a look at it. Let me zoom out a little bit and look at the daily chart. Okay, so Solana. Yeah, Solana's just, I think, waiting for Bitcoin to do something. The Bitcoin dominance is like pretty high. So most of the money, as far as I know, is going into Bitcoin. So Solana's just hanging out in its range. This is a 3-hour chart. So you're looking at, going back to the beginning of the year, beginning of April now. And it's just staying in a range. It looks like it wants to hang out really right now between about 140 and, anywhere from 155 to 160, maybe 140, 160. This is like a $20 range. So it's gotten rather quiet, as a lot of cryptos have. You have some big winners in the crypto world. I did have Hype on my list, and I told our guys about it. I kind of forgot to take the trade, but I called Hype out like months ago. Maybe, I don't know, February, April, something like that, March. And it made its way down to $9 and made its way up to like, $46. So I called that out. And, before it went down to 9 and up to 46, that's a times 5 for anybody who's, doing that. It's a sea of red right now, though. Crypto's all, having a rough day for a lot of cryptos, with a few exceptions. So let me see here. Just take another look at the NASDAQ just to see what it is. Yeah, NASDAQ, uneventful. Let's take a quick look on the half hour just to see. Yeah, whatever gains were made from the FOMC are gone. The presser is happening here in a few minutes, so we'll hang out for that presser. I tend not to watch it live. It's like, what are you going to do with that? Just wait for it to be done. But yeah, we do shows like this, like Tuesday through Thursday. I'm on live, X, YouTube, and Rumble, and we start at 8:30 a.m. EST Tuesday through Thursday. We do about 10 minutes, 15 minutes, and then we go to the Algo Factory Live Lab. And in the Live Lab, we we go for as long as an hour, usually about almost an hour, like 50 minutes, 50 minutes. And we just answer questions. We talk geopolitics, and we talk about a lot of stuff that actually goes into the markets. So, geopolitical stuff, especially right now, is really going to affect markets. And we've had some pretty good, forecasts and stuff, especially from Fee the Gorilla, who's on there. And you're going to see a lot more of him on Rogue as well. But yeah, just join us, and then that's just like coming on YouTube and watching us like for free. Now, if you come into Algo Factory, you get all that time and you get us teaching you how to build algos like you see on the screen. A couple nice shorts got called right here. You see the red tab, nice moves down. Red tab, nice moves down. Does the job. It's not always right, but it's usually right. And when it's right bigger than it's wrong. It's right more often than it's wrong. But yeah, this is good stuff. Definitely good algo. Proud of it. Big one right there. Holy shit. Yeah. So if, like I say, go to the YouTube comments. I am on X, but I can't see the X comments. Let me see if I can just do this real quick. A lot of people watching. Now, can I see the comments on X? Let's expand this. Okay, there is the X chat. I see the X chat for the live, but I don't see anybody making comments. Most people watching this by far are on X. That's for sure. So if you guys have comments, go ahead and fire them off over there. And hopefully I'll see them. Let me see if I can move the screen to another spot here. Let's do that. Okay. Let me go back to the charts. Where's that chart? There it is. So if you guys have any questions, ask. If you want to see a chart, ask. Let me take a look at some forex charts. That's where I spend most of my time is trading forex. It's it's relatively predictable, easier to trade than just about anything, and I've traded just about anything. And I have never traded the bond market. That's one thing I've not done. Okay, so initial reaction USD, compared to the Japanese yen, USD got weaker, and that makes sense. It was all the stocks went up, so you would imagine that the dollar would get weaker. It's just how that goes. Holding rates steady apparently means weaker dollar to the market, or at least compared to Japanese yen. Now fits with the euro too. The euro is just continuing along what I thought it would do, right? Just going up along this trend. I drew this, several minutes ago. So wouldn't be surprised to see the euro gain some traction. Hasn't been so far very tradable. Let's see if I can find some trades. I'm going to take a minute to kind of remember we're waiting for Powell. So it wouldn't be the best time to trade right now because Jerome Powell is going to do his presser in 2 minutes. So, given that we've got a 2-minute kind of hold off on the press conference, it'd be unwise to trade right now because you don't know what he's going to say. You'll have people who will try to trade it. That's certainly going to happen. You have a lot of people who is, he's going to say this, and then they go, long, and then he fakes them out and it goes short and they get knocked out. That's gambling, ladies and gents. I don't recommend that for certain. Don't recommend it for certain. But again, if you want me to watch a particular chart during this time, just let me know what it is. Everything seems to be on edge, waiting for Senior Powell. Well, that's good that we got a couple hundred people watching. Don't forget, go into the Go into the description, and if you want to see, if you want to get a free algo, you want me to let you know when we're going to have our wow, brain fart. Wow. If you want me to tell you when we're going to do a workshop, it's a free workshop. It will be free this time. It will not always be free. The next ones will be, you have to pay for it. Go ahead, send us an email. We'll send you free algo. We'll put you on the list for when we're going to send that out. Again, I was going to do the workshop in June, but it's getting too close to the edge of June. I got to pick a date and deal with that. But just with all the madness in the Middle East, just not a real good time to try to do that. But if it continues, I'm going to have to do it anyway. I mean, I trade during these times. I'm profitable during these times. Let's look at the GBP JPY. That is a very volatile pair. Very volatile. GBP JPY is remarkably volatile. So it's kind of like the crypto of the forex. Actually, forex is volatile, man. People don't know. Forex is pretty volatile. Now, this is a bearish deal right now. This actually, man, I wish I would have caught this earlier. I wasn't watching the beast. This one just wants to head down, man. Look at that. Okay. So I'm going to go a little higher time frame and look in the daily here. And it does look like it's going to continue down. Now, it's been in a very high time frame, kind of a messy range. This has been basically between, let's delete some of this drawings. Let's move this here. So if I were to draw out the beast and kind of, talk about what it's been doing, the range is not very clear. Is this the high? Is that the high? More or less, I see a lot of pivots around these numbers that I just drew. So with that, I would guess that price might be ready to go ahead and head back down, also based on some things I see in the algo. There's a lot of room for that to fall. So those of you who are trading like super high time frame, maybe you don't have time to sit in front of the computer, stuff like that. I'm not saying to take this trade at all, but I think that this might be the opportunity. And I'm going to have to look into it. I might have to start including the beast because it was not doing anything for a long time. And now it appears to no longer be doing nothing. It would have been better to catch it earlier. There might be an opportunity for, to catch like a bounce up and then get short, or maybe I'll just get short when the time is right soon with a trade right now that's 2-to-1 risk to reward ratio. So in this particular case, if I got into this trade and I risked $1,000, then if it went to my target down there at the bottom, I would be taking out $2,035, and it probably would happen around the beginning of July, right? Maybe, yeah. I mean, maybe beginning to mid-July, right? That's a kind of a high time frame trade for me. But what I probably would end up doing rather than that is to just kind of catch these moves on the way down, because it's not going to be clean. You might get a couple long moves, but at some point it's going to do this and that. And there's going to be like 10 or 15 trades in there that I can take as a swing trader, and many, many, many more as a scalper. So I'm going to be paying attention to the beast. I'm going to put it in the lineup, and I'll take something else out of the lineup. But yeah, just definitely looking at the beast for that. It's going to have some nice shorts coming in, and again, that's based on the algos, and let's see what's going on. Yeah, I think that might be the way for now. We'll see. We'll see if that is the way. The GUEY, the way. All right. 12:30 press conference is going. We can probably expect some fireworks. I think the place to look is going to be in forex for the fireworks. All right. So let's see if anything's happened. Let me jump down to the very low time frame. Let's go to the 1 minute. Yeah, see a lot of chop right here. Not a very exciting FOMC. Of course, they held rates steady, so what's there to be excited about, right? But by the same token, should be seeing more action on a Fed funds day, on FOMC day. But the problem with the FOMC is that it's so close to the market close that I don't find myself like taking a lot of trades. It's kind of an issue. If you're watching this on X, please follow me over there. I do this stuff like all the time. I put out a ton of content on X, and it's just, I don't know. I don't know if it's, I'm not doing it right or whatever, but I put out some really good stuff, like basically for free on X. Basically giving away money for free is what it ends up being. So if you're not watching me on X or follow me, I don't know what to tell you. But I do this every day, especially, I do this Tuesday through Thursday. Right. And I put out other content on other days as well. So if you want a bunch of free content, come check it out. And like I said, go into the description or the X post or whatever. There's a link on there. Click that link. Name, address, could be a fake name. I don't care. Put your email address, not your address. I don't care where you live, just your email address. And we will send you a free algo, and we'll send you a free invite to the workshop, yada, yada. You've heard it all. You just heard it all again. Not seeing a lot of action yet. We don't know what Powell has said just yet, but this has been pretty lukewarm. If it gets choppy like this, then ain't nothing else to talk about today. And that's not unheard of. Even the indices are, not doing a lot, which it's not a huge surprise. It's usually going to be the forex markets that really make a big move. And sure, my algo is pinged, but that's on the 1 minute. Yeah, I'm not going to trade the 1 minute. I mean, I will, but not on a day like this. I'm going to trade the 1 minute. It's going to be based on much higher time frame data Okay, a little peek up here. Let's see here. No, the algos are calling. Yeah, the algos are just mixed up right now. There's not like a clear direction right now. It's like the Nasdaq kind of wants to pull back, but it's got a lot of bullish energy, so it has these pullbacks that end up just kind of stopping and going higher. And this is not exactly predictable, but that's fine. I mean, I could mess around on the short. I know dudes that are trading the Nasdaq on 1 minute and they're murdering it, just killing it, man. So right now, it does appear. I don't know what Powell is saying. Let me see if I can glean what he's saying here. Let's see here. All right, let's see. Yeah. Pretty quiet, pretty calm. Let's move over to a different news channel, see if I can gather what's going on live time here. There should be some live coverage I can. Okay, you got Trump complaining. Diminished uncertainty. Okay, so this is the let me see if I can flip over to this so you can see it. We're going to take a look at the actual data, not the data. I mean, the data's on the page, but we're not going to focus on it. We're just going to take a brief look at it. Let me share this tab. So this is over on Zero Hedge, rate decision, no change, but diminished uncertainty. As 100% expected, the Fed chose to leave key Fed funds rate unchanged, which is what we told Algo Factory this morning, what at least our quant data said. Fed holds benchmark at that. Fed says uncertainty about the outlook has diminished. Still elevated uncertainty. Well, yeah, imagine that. I mean, it's diminished, but we also have, potential nuclear war. So good luck. Good luck being totally certain during that time. 2025 rate cut expectations are the same. Dot plot has cuts. Okay, dot plot has rates mostly maybe being cut sometime this year, and another time, at least. Let's see, implied. So the implied rate is circling around just below 4 by the end of this year, circling around just below 3.5 by 2026, and then kind of spread out into 2027, which is to be expected. 2027, they don't have as good of a prediction on that. But you know what? These dot plots are hardly. I mean, they're not that correct. And a lot of it is just not that it's a bad way to look at the data, but it's just that things change over time. Like the things that the predictions on which these dot plots are based, those predictions and the data that go into those predictions that changes. You get new data tomorrow. So, that's, I don't want to talk trash on the dot plot, but if you get new information, dot plot's going to shift. So Fed's economic projections move towards stagflationary. GDP projection falls, PCE inflation rises, unemployment projection ticks up. And you know what? I'm going to tell you something. A lot of these data that come out, like, oh, the Fed says this about inflation, a lot of stuff's just it's gotten to the point where it's like political. Have you noticed prices, anything going up more than, than a few percent? I mean, not really. Yeah, stuff's expensive, but is it because of this or because of that? Like, is milk that much more expensive? No, not really. There was a little inflation last year. Yeah, there was some inflation, to be sure. But was it because of this or that? That was last year. I haven't really seen any noticeable inflation since the tariff started. That's just a bunch of people flapping their gums. You ask me, because I just haven't seen it. Show it to me. Love to see it. Nothing happened in the markets. Markets are just freaking quiet. Quiet Fed. I think everybody's on the okay. A little action here, USDJPY, which is to be expected though, because that's a different story. So we got to understand the relationship between the dollar and the Japanese yen, and a lot of that has to do with so it appears the dollar is getting stronger against the yen, which means the yen's probably getting weaker, indicating that money is going into the stock market. But this is a 1 minute time frame. These could just be fluctuations, right? So I don't want to get too into that. I'll go to like the daily for the broader trend, right? So stock market getting higher, which means the USD should be getting stronger against the yen, which it kind of isn't. But here's the thing about the yen. So when the stock market is going up, money tends to be leaving the Japanese yen, but it also tends to be leaving the dollar as well. Now, historically, the Japanese yen has been a safe haven, if you will, or it's been like a liquidity solution, like global equity markets. So they print a bunch of yen and then they sell it for other treasuries to shore up what they're doing in Japan. So Japan doesn't end up with a bunch of, yen. And then that yen is used to kind of really prop up markets or stabilize markets around the world. But the relationships have been a little more murky these days between the stock market and the yen, right? And the dollar has also been acting in a similar way to the yen from that regard. It's kind of like yen to dollars to stock market. But that would say that money wouldn't stay in the dollar for too long. But let's take a look at what the dollar is doing. That's an important thing. A lot of people don't know. The dollar right now is continuing to head down over time, which is really odd because we're holding rates steady while Europe is like capitulating. If you take a look at like the interest rates over in Europe, I mean, that's remarkable. Watch this. Let me go over to Forex Factory if I can find it. Share this tab instead. So I'm looking for, here it is. So as far as the central bank rates, the USD is at 4.5. The British pound's at 4.25. Aussie 385, New Zealand 325, Canadian 275, Euro 215. So the Canadian and the Euro are very low, right? And they've been cutting a lot recently. You would think that the cutting of those rates would cause their currencies to fall, to fall like that, right? You think it'd cause it to fall in value, but yet the euro is doing like the opposite. The euro has been like really cranking up against the dollar. And the same with a lot of the currencies. So if we go back to the charts, what you're looking at here, as soon as I can get it over there, is the Dixie. And the Dixie is a comparison of like the dollar and a bunch of other currencies, the euro being one of them. And it was kind of a stable back and forth going back to 2022 after, pandemic and the beginning of the, Russia going into Ukraine, really the kind of the end of it. And it was steady from like 2023 up until about maybe, mid to late 2024. It just was bouncing back and forth. Everybody was happy. And then, basically Trump got elected and the dollar really went high, and then the dollar got crashed down low. And that dollar going low started during the tariff tantrum. So think about that. If the tariffs are going on, the word is that especially the Europeans in particular, and probably the Swiss, were yanking their money out of the U.S. stock markets, turning it from dollars to euros, putting it into their like the DAX and the European stock market, because the DAX was doing really well there for a minute, and it seems to be like it's running out of gas. But for now, the dollar continues to fall as far as actual like price versus these currency. The dollar continues to fall. And if that's the case, what does that mean? Well, I can tell you what it means for exports and for imports. if the dollar is falling and the dollar is cheap, it's good for exports. We can export stuff out. If the dollar was expensive, it would be hard to export things. People wouldn't want them, not at the prices we need to sell them at. And the euro, on the other hand, look at it. It's been going up, since the beginning of the year. It's been cranking up, and so Europe's exports are going to suffer whatever exports they have left. So having a strong currency is like not all it's cracked up to be. You want things to make sense. You want things to fluctuate in the ways that the market forces cause them to. And it appears that what's happened with the euro is not market based. But what's happening in Europe, a lot of it's not really market based either. That they're very socialist over there, so they're not reliant on market forces. They're reliant on other stuff. So that being what it is, it doesn't look like we're going to see much action today. This is the euro. So let me jump down real quick to the 5-minute chart. So we are seeing a little bit of movement here on the euro, and take a brief look at the algos to see. It does look like it may. It's probably just going to range. It's hard to say. I want my algos are kind of split, but I would expect it to kind of, like I drew earlier, just sort of range in between these areas of, say, about 114.84 all the way up to like 116.32. But it might bottom crawl and break downwards. We're going to see about that. At some point, the euro is going to have to pull back. It's been going up all year long, and it's been doing almost nothing but pulling up. And we did have a significant pullback here from 115-ish, like 115 and a half, down to 110, and that's big. That's like 5%. So it came right back up, and it took a little bit longer to come back up than it came back down, about almost twice as long. So is it going to pull back a little bit? Or we're going to see a range on a kind of a higher time frame range where it goes back and forth up in this same kind of area? That remains to be seen. I don't really care in a sense. I don't trade on time frames that high. But as it stands right now, we might be seeing the beginning of this pullback. I'm going to see about that. So I don't see any requests. I don't see any new information. I don't see anybody asking for any charts. So I'll probably hang back. I'll take one last look at Bitcoin. Not much going on. USD JPY. Yeah, it looks like the USD JPY that one seems to be kind of pulling up a little bit. That's the dollar is getting strong against the yen. That's interesting. I wonder what that's about. We got the NASDAQ not really doing a whole lot. So not a big FOMC day, but thank you all for watching. Again, go to the description, click on the link, get your free algo, give us your name, real name, fake name. We don't care. Put your email in there. We will send you, you'll immediately get a free algo, but you'll get on a list to where we can send you like, hey, our workshop's going to be this day. And, here's market updates. I do market updates every week. If something big happens in the market, I will send out an email, but usually it's just once a week that I send the market update with the email. And that's, free of charge. So there's a lot of stuff we're giving away for free. If you're watching on X, please follow, and we will catch you all on the flip side. Thank you for watching.